Imagine this. Your parents or grandparents probably bought their first home in their 20s or early 30s. Back then, one person's income, maybe a factory job or a modest office salary, was enough to get a mortgage, buy a decent house, and still support a family. Today, that same dream feels almost impossible. If you're a young American looking at the housing market, you're not just priced out. You're facing a system that feels rigged against you. The dream of homeownership, once considered the ultimate symbol of stability and success in the United States, is now slipping further and further away for millions. But why has buying a home become so difficult? To understand this, we need to dive into the housing crisis, corporate landlords, and the rising mortgage rates that are reshaping the American dream. First, let's talk about the housing crisis itself. The cost of homes in America has skyrocketed over the last few decades, and especially after the pandemic. In cities like Los Angeles, San Francisco, New York, or Austin, the average home price can be 5, 6, even 7 times the median annual income. Even in smaller towns, prices have jumped to levels where ordinary middle-class families can't compete. Supply is one major issue. There simply aren't enough houses being built to keep up with demand. Construction slowed after the 2008 financial crisis, when the housing bubble burst and developers became cautious. Since then, the population has grown. Millennials have entered the housing market, but the supply has remained tight. Less supply, more demand, higher prices. It's basic economics. But this shortage has created a brutal competition, where only the wealthiest or investors with deep pockets can grab the limited homes available. And that brings us to the next big factor: corporate landlords and institutional investors. In the past, when a house came up for sale, you'd see families bidding against families. Today, you're often competing against Wall Street. Companies like BlackRock, Invitation Homes, and other hedge funds are buying up single-family homes in bulk. They swoop into neighborhoods, purchase dozens or even hundreds of homes at once, and turn them into rental properties. For them, it's not about living in the community. It's about turning homes into profit machines. This has completely distorted the market. A young couple trying to buy their first home suddenly finds themselves bidding against a billion-dollar corporation that can pay cash, waive inspections, and close instantly. Naturally, the corporation wins. And what does that mean for ordinary people? They're stuck renting, often in homes that could have been theirs, paying inflated rents that make it even harder to save for a down payment in the future. Then there's the issue of mortgage rates. For years after the 2008 crash, interest rates were historically low. Borrowing was cheap, and if you could afford a down payment, you could lock in a reasonable monthly payment. But in the last couple of years, the Federal Reserve has raised rates aggressively to fight inflation. Today, the average 30-year mortgage rate hovers around 7%, the highest in decades. To put this into perspective, if you wanted to buy a $400,000 home, a 3% mortgage rate would mean a monthly payment of around $1,600. At 7%, that same house costs you nearly $2,700 a month. That's an extra $1,000 every single month, without the house itself changing. For many families, that difference is the breaking point between being able to buy a home or being forced to keep renting. But it's not just about prices and rates. The entire system is tilted against ordinary buyers. Wages in America have not kept up with inflation or housing costs. While home prices have tripled or quadrupled in many areas since the 1990s, median incomes have barely doubled. This widening gap means that even people with stable jobs and good credit find it impossible to save enough for a down payment, especially when rent and living costs keep eating away at their income. Add student loans, medical bills, and rising costs of everyday essentials, and the idea of saving tens of thousands of dollars feels unrealistic for most young Americans. Now combine all of this: a shortage of housing supply, corporate investors buying up properties, skyrocketing prices, rising mortgage rates, and stagnant wages. What you get is a situation where millions of Americans feel trapped. Renting feels like throwing money away, but buying a home feels impossible. And psychologically, this has a huge impact. Home ownership isn't just about having a place to live. It has historically been the foundation of wealth building in America. A home is an asset that appreciates over time, something you can pass down to your children, a source of stability. When people are locked out of that system, they're also being locked out of the primary way Americans build wealth. To make things worse, Even policies meant to help often backfire. Government programs offering low down payments or first-time buyer assistance sound good, but they often just fuel demand without addressing supply. More buyers enter the market, but the number of homes doesn't increase, so prices get pushed even higher. Meanwhile, zoning laws in many cities make it extremely difficult to build affordable housing. Communities resist apartment complexes or higher density housing because of neighborhood character or fear of lower property values. This NIMBY, not in my backyard, mindset keeps housing supply artificially restricted while the population continues to grow. So what's the result? An entire generation, millennials and Gen Z, feels like the American dream has been stolen from them. For their parents, home ownership was a realistic goal in early adulthood. For them, it feels like a fantasy. Instead of building equity in a home, they're stuck paying record-high rents to corporate landlords with little hope of escaping the cycle. And, while policymakers debate and economists argue, the gap between homeowners and renters keeps widening, deepening inequality in America. At its core, the housing crisis is not just about real estate. It's about fairness, opportunity, and the future of the middle class. When ordinary people can't buy homes, but corporations can buy thousands, it reveals a broken system where wealth is concentrated at the top. When mortgage rates rise faster than wages, it shows how financial policies hurt everyday people. And when owning a home becomes a privilege instead of a right of the hard-working middle class, it signals a dangerous shift in society.